sense of capital. Aloha, ladies and gents. Welcome back to new and to a leggy episode of A Sense of Capital Insights time. Oh no, live earnings. Your host of today, as always, is Julian. I'm very glad to have you in. Guys, I have no clue why the camera is that laggy, but I will quickly reduce the size of the screen, of the camera screen, to a minimum, and I assume then these lags will not be that much in the focus anymore. However, guys, I'm very glad that you have joined. Your host of today, as always, Julian. And again, I'm very glad. And today we will cover the Q3 2025 earnings results of the cybersecurity vendor out of the US, which is called SentinelOne. As always, guys, I will quickly add some words to the company, just 20-30 seconds, then share my screen, showing you the results, going through all the details, and hopefully all of us are a bit smarter afterwards. But before I start with this, a quick disclaimer as always: in the upcoming minutes that will not be financial advice, consultation, or whatsoever, and there's no guarantee for correctness of the provided data. So make sure you check the information, you do your own due diligence, your own research process, because at the end it's your own money when you invest it, and you need to live with the results of this investment, no matter if it runs out successfully or not. Okay, guys. So what is SentinelOne? You can see it here, hopefully. Is it working? Yeah, okay, now it is working. SentinelOne is a cybersecurity provider out of the US. You can see here they have different core cybersecurity services and products, like, roughly 50% of the turnover results out of endpoint protection solutions, which is really the legacy business for this company. And major competitor in the space is obviously CrowdStrike, but as well others like, for instance, Palo Alto Networks. But then we have as well cloud security products and identity and login products. And on the top of this, data and AI solutions. Of course, AI, like many companies out there nowadays. But the truth is actually they already wrote AI big and fat on the screen like years ago, way before the mainstream, let's say, find out that this might be a good catchphrase. As you can see, the results are already live, and I have them here. You can see the press release and the actual PowerPoint presentation slide deck, and a little bit like this. That looks good. And I already used all this information and added them to the well-known Excel sheet, and we will go through it right now. So again, I copy and paste them, make sure the data is correct. I tried my best, but it's quite late, and I'm just a human. Sometimes I'm not working in perfect condition, let's say it like this. Okay, first we check out what is going on with the revenue. So top line growth and afterwards bottom line growth. But first top line growth, and we can see here the results of this year, Q2, Q3 and Q4. Q4 is obviously the guidance, and the past year, Q2, Q3 and Q4. And so we compared them a bit with each other. So first we set the focus on the actual revenue results. You can see here in the blue, 256 million was the guidance by the management and the assumptions by the analysts. And the result is actually 2.59 roughly, which is for the, let's say, based on the history of SentinelOne, that's quite a strong result. That's quite a strong beat. For many companies out there it might not be, but a lot of times they really just slightly achieve a beat of the guidance. And in this case, it's actually quite a strong one. We're talking about 23% year-on-year growth. Everything from my perspective, at least above 20%, I'm kind of happy with it. but again, it is quite a strong beat, and that is nice to see. But in the case of SentinelOne, we not only have just the actual results, the actual revenue results, but as well the forecast, or let's say the guidance communicated by the management. In this case, it's 271 million. I wanted to see something like 269 million, so 2 million less, to make sure that we see the same forecast to forecast development, so Q3 to Q4 forecast development like in 2024, as you can see here. As you can see here and here. So past year it was 12.5 million. Now we can see definitely a raise of roughly, let's say 2.5 million, which is quite strong actually. Yeah, and again we have a beat, and a stronger beat than I expected, because again I expected something like 257 million, so a very, very slightly beat, and it's a way stronger one in terms of the actual results and as well in terms of the guidance, which was mentioned and communicated by the management. So therefore, actually, I mean, I know the stock is down after markets, but I rated the first time since I'm invested in it, honestly guys, green. Yeah, the revenue. So I can't complain so far. However, guys, maybe let's check out what is going on with the earnings per share. Maybe we have some issues with the bottom line growth. You can see here I added the net income on a not GAAP basis, and the weighted average shares outstanding in a diluted form. And the result of it is that we have 0.07 US dollars per share as a result. And this again definitely beats the forecast of 5 US dollar cents. My target was a slight beat of 1 US dollar cents. Why? Again, last year, so Q3 2024, they achieved as well a beat by 1 US dollar cents. This is what I want to see, but they again beat the expectations. So for me, that is one more time a beat from my expectations, not the beat of the original guidance, my expectations, which are always a bit higher. So far it's actually top and bottom line, and that counts quite a lot for me. It is positive. It's positive valuation. I can't believe it actually when I check out the stock price after market and the actual results. I mean, maybe sometimes I'm missing some details, would not surprise me, but actually so far so good. So now guys, we dig a bit deeper into the company specific details. We have here again the revenue, and then we have the revenue share, US and international revenue. How much international revenue share is existing most of the time gets communicated by the management during the earnings call, which might already is going on at the moment. Yeah, I started the stream quite late, so sorry for that, but sometimes it is how it is. But you can see here the major part of the revenue gets accomplished in the US with 62% and just 38% international revenue. But actually that's quite strong, especially when you compare it to other cybersecurity driven companies from the US, especially the major competitor CrowdStrike. And what you need to know is that the international revenue, at least based on past quarter, so Q2 earnings results, is growing definitely stronger than the US driven ones. I think international one is growing or growth past quarter by 27% year on year, and overall revenue growth was something like 23%, so definitely stronger. So we are reaching and getting closer to 40% mark, and I like it that they are diversified and running out businesses, for instance in India. I like this very much because I see a lot of potential in those markets in many directions, and yeah, I think that's quite sustainable to approach like this. Customers, wait, let me check, but I assume they didn't communicate any customers number. At least not, no. I think they do this just once in a year, something like this, so we don't have this number at the moment. We need to wait till Q4, but then we will add it. But annual recurring revenue, so I mean that's the actually, as when you are an investor of subscription business, SaaS business, software as a service business, you know that ARR is actually more important than revenue. I mean, that's the secured revenue, let's say it like this, on the current status, on the current base. Yeah, so really the subscription agreements which have been finalized by signatures. And we can see definitely an all-time high. Let's check out the details, and you can see here, past quarter it grew by 24%, and this quarter by roughly 23%. And I think that is something which might has been affected some negative resonance by the investors. That might be a reason, a cause why the stock is tanking at the moment, even though considering all the other results so far, I don't understand it that much. However, that might be the case, and it's still, I think, not crazy weak. Yes, you would love to see it higher. Actually, even I would prefer definitely to be even higher than the revenue growth. Like last quarter, you can see ARR growth was 24% and revenue growth was just 22%. Now that shifted, and revenue growth is actually a bit higher than ARR growth. So the current result is a bit stronger than the one in terms of the ARR, which is expected for the future, let's say it like this. And this is what I kind of understand. So, however, it's still not on a crazy bad level, 22.7% from my point of view. It's definitely a strong all-time high. Doesn't look bad at all. I mean, they already secured 1.055 billion in their pipeline. For me, it's a neutral one. I can't give it a negative take for this. I assume that is something really which might be taken negative by the market again, but from me, I will not take it like this. However, now let's check out what is going on with the customer base, and actually with the large customer base, yeah, or let's say the customers who achieving larger ARR. In this case, more than $100,000 annually, and we can see, of course, it's as well an all-time high. But here it's a bit a similar scenario. And I can imagine that investors out there, they think, okay, results, revenue, and EPS looks good, but this actually doesn't look that comfortable. Somehow customer base is shrinking, large customers is shrinking. Why? What is the case? Actually, they have now a flexible agreement set up, so customers can book more modules, so more products and more service, way more easy to their catalog than in the past. And so more $100,000 revenue plus, or ARR plus, customers should actually be the result out of it. But that doesn't seem to be the case so far. And I expect really when the investors consider the future and the pipeline, they're getting a bit concerned because of both numbers, ARR and large ARR customers. And actually, because the drop is a bit stronger, actually way stronger compared to the ARR in this case, I really and actually honestly want to leave, even it's not the most negative red rating, but in this case I rate it negative. Yeah. So when we take a look in the details, we already recognize quite quickly there are some hiccups, maybe even stronger ones. The future will show it. Again, I don't think it's absolutely no-go, but yeah, could be better for sure. Could be better. You would love to see that it's somehow accelerating simultaneously to the revenue results. Okay, let's look and take a closer focus on the profitability of this company. And we're starting with the gross margin on a GAAP base. And we can see here it was flat past quarter, so Q2 2025 to Q2 2024, 0% development, and now it's decreased by 1%. 74%, and it is the third lowest. Yes, it was lower in Q4 2023 and Q1 2024, but it is quite low historically considered, and especially lower than in the past quarters. So yes, a clear negative one for me. Okay guys, however, let's take an even closer look on the cost side, on the expenditure side of the business and expenses. We start with general administration, and we can see past quarter year-on-year development was -1% roughly, and now -5%. So that's actually a strong surprise. And I think it's the all-time low with 20%. Almost. Q4 2024 was on the same level. However, it is low. It is quite low. And it's definitely lower than the lowest in this year. And that is nice to see. And that is for me positive. Yeah? Nice year-on-year development, nice quarter-on-quarter development. Definitely want to honorize this. Then we have here sales and marketing. That is as well, I think, an indicator for strong competition. I mean, if the competition is rising, you need to set more focus and more energy and, let's say, overall stronger resources in this direction. But it doesn't seem like this. I mean, again, past quarter we have a development year-on-year by 7% and now 10% minus. Yeah, so it's accelerating. It looks good. It looks great. 49%, and this 49% you can see here is for sure by far the lowest. For sure by far the lowest of the past 8 quarters, and as well for sure the lowest this year. So again, something very positive actually. Now let's check out what is going on with the expenses, which you might count the most out of these expenses types as an investment, and we're talking here about research and development. So it is kind of an investment into the future. I don't take it actually that negative if it grows or it's stable, because again, I think it's a good investment. It's important that companies like SentinelOne, which are active in the cybersecurity space, and I assume competition is very strong there in terms of who is providing the best solutions and staying up to date with the solutions and keeping on track. I think it's challenging. It's important that they invest. And I mean, these results, they show a bit this kind of story. I mean, past quarter it actually went up by 1%, and now it went down by 1%. So that's great. That's great. And we have here 32%, 32%, 33%. Past quarter 33%, now 32%. Again, 1% down. For me, that's as well good. That's as well good. And I mean, look, we are 100% almost on the break even, if we want to call it like this. And in terms of operating expenses, 101%. And I mean, clearly, I mean, it's telling the same story like the sub numbers we covered a moment ago. Past quarter it was always good, already good with -7%. Now it's by -16%, even better. It's increasing. You can see really we came from a whole nother level. Yes, it's not developing that crazy quick, but it is developing. It's heading down more quicker. Yeah, I really have the feeling when I take a look at this that the management takes a better focus on the shareholders and somehow evaluate them better. I mean, past quarter it went down by 4% and now by another 6%. That's great to see, and it's not unlikely that next quarter or latest to 2026 we are below operating expenses of 100% based on the revenue. I know it's not like a crazy good achievement, honestly, but it is a start and it's the right development. Yeah, and I think it was criticized a lot in the past. Not only this, as well as shareholder dilution. We will check this out in a moment, but yeah, not that bad actually. So for me, overall, this section, this part looks good. Now we check out 2 KPIs which I created by myself to track a bit about how are the expenses in terms of the large customer growth to keep them, yeah, to make them loyal, and how are the expenses in terms of acquiring new large customers, yeah, because we only have this ongoing access to the large customers, not to the overall customers, which are roughly 14,000. So I built this kind of KPI. So take it with a grain of salt, yeah, and careful, but it is good, I think, to compare it each quarter and to see how their development is going on. And now again, we check out, okay, how expensive is it for SentinelOne to keep their large customers? So this consists basically out of the administrative expenses and half of the research and development costs, and set this in relation to the you can see it here, to the customer base and to the revenue. So let's check out what is going on. And I mean, past quarter it went down by 1.5%, and now it's strongly accelerating in the right direction with minus 13%. Again, definitely by far the lowest. Great to see. Looks like the costs are definitely shrinking in this regard. And now we check out what is going on about the acquisition costs of new customers. So in this regard, I put in a relation sales and marketing cost plus 50% of research and development cost to the new added large customers, ARR customers. So basically the difference between this 1,572 of this quarter and 1,513 of past quarter Q2 2025. And you can see this acquisition costs actually increasing. Yeah? Past quarter it went down 18%. Now it went up by roughly 38 or 40%. Yeah, so that's actually quite bad. And why is this the case? I mean, it is very likely not based on the cost development, on the expenses. It's more depending on the development of the large customer base, because I mean, not without any reason, we marked it already as red. Again, this jump is just not that remarkable. I mean, we had from Q1 to Q2, let's see on the absolute number, talking about 41, 51, 54 new customers, 54 new large customers. Hope I didn't mess this up. Is it correct? Man, it's a bit late. But that should not be any excuse. I mean, it's simple math. Math. And now we have 59. Yeah, actually not that bad. Maybe the seasonality. I mean, when we look Q2, let's check out what went on a year ago. Yeah, the growth was for sure larger. Let's check this out, guys. So 1 year ago, Q2 to Q3, they added something like 77 new ones, and now only 59. Yeah. So, and on the other hand, Q1 to Q2 wasn't that strong. So I mean, everything is in relation, and I can imagine when again they screen it. Okay, ARR, large ARR customer development doesn't look that great. On the first glance, it is not that compelling and appealing, and yeah, on the second as well, from my point of view, I would love it's developing better, because I mean that's the customer base they can utilize to again address more modules, more products of the catalog, like Purple AI and data analysis and whatever they have, an endpoint protection classic customer, and in the future they might go as well for the identity security solutions. You want to have a strong customer base, and yes, again, it's large customers, but you're asking yourself, okay, why they have 14,000 14,000, or nowadays very likely way more than 14,000 customers, maybe even 15,000. And why only roughly 10% of them are large customers? What is the reason of it? Yeah, is there a reason of it? And why not more adopting to more solutions? Are solutions good enough and all of this? Yeah. Hi Mike 4214E. Yeah, you were very welcome. Honestly I thought nobody's watching because I was that late when started the stream, and not that many are, I think, invested in SentinelOne, but very glad to have you in. And if you have any questions or you want to leave a comment or correct me if I communicated something in the wrong direction, please let me know. Yeah, highly appreciate for sure that you joined, Mike. Okay, let's take a closer or even closer look on the profitability by setting the focus on net income margin on a GAAP base. And here as well, I mean, again, they're losing strong money. Yeah, it's not surprising that it's not positive. However, it is heading in the right direction. Yeah, so we had past quarter year-on-year development of 5% up, which was already good. And now we have 14% up. Yes, of course, if the operating expenses and all of this is looking good, this will likely not be worse, let's say like this. But again, minus 23%, it seems for me already like I used the wrong number, but I likely didn't, because, let me check one more time, but what I can share as well with you. Document, and we have here, net income margin 23%. Yeah, it is how it is. It is 14% better. It is 14% better, and non-GAAP base even positive. But yeah, okay. Take the focus on the GAAP base. I think that, from my perspective at least, that's the more that's the KPI which speaks better truth. Let's say it like this. Again, but it's very good. By far the strongest one, by far the strongest one in the past quarters. Not sure if there's a one-time effect involved or something like this. You never know, but looks good. And now let's check out what is going on with the free cash flow margin. I mean, as you know, free cash flow margin is not that easy to affect. It speaks as well a lot of times quite good the truth. And here we have a similar development. I mean, past quarter, year on year, no development at all. Now 12% up. Great to see. Great to see. I mean, it was already positive in some cases, but you can see now it was already 2 times positive in this year. Yeah? 1 times 20% and now 6%. Past year, it was just 1 time positive. You can see it here. We're talking about, what is it, Q1 2024, and afterwards negative. So that's great to see. And I mean, it looks like we're talking about a positive free cash flow margin for this year, very likely. Not sure what will be going on with Q4, but I assume there will not be seasonal-wise a bad surprise. So again, something really solid. And now we have something which I think is getting criticized very, very often, not just at the case of SentinelOne, but as well when you, for instance, yesterday evening, or depending where you're located, but let's say European time, Central European time, yesterday evening, Snowflake, for instance, another SaaS company, data SaaS company, launched and announced their results and dropped as well very heavily after market, not because just of one reason, but I assume one aspect as well is the highest share-based compensation, and I assume it's even higher. I assume it's even higher than SentinelOne, for sure on the absolute scale, but I think as well on the relative one. And even for me as an investor, I think that is for me the largest question mark as an investor of SentinelOne, because really, I mean, I assume the numbers are correct, yeah. And if 1/3 of the, so 30% roughly of the revenue, the quarterly achieved revenue is kind of dilution, yeah, it's crazy. I mean, it means that if that's correct, yeah, correct me if I'm wrong, but if that's correct, the numbers, that at the end of the year, the stocks are 30% less worth as you as an investor because of the strong dilution to pay the staff, and they get compensation again through stocks. And yes, I mean, it might be the case that this works like this in the software business, in the cybersecurity space, but it's still quite high. However, we take a look on the development, and last quarter we already had a decrease by 2% year on year, and now we have a stronger one by 4%. So even this is accelerating and hitting into the right direction. It's for sure an all-time low. It's first time a 2 in the front. Yes, it's not crazy compelling, but it is heading in the right direction. And I, at the end, rate a lot of time, or set a high focus when I rate it in terms of the development, not just on the absolute number. Yeah, and so this is for me a quite strong development and shows me that shareholder valuation is taking place, and the management, I assume, understands that they need to take care. They need to take care of their shareholders and set the right signs. And one of those might be that not just the other expenses getting decreased, but as well, of course, the dilution. Because, I mean, yes, you can, for years and years, you can compensate your shareholders with stocks, but I mean, when the share price is dropping all the time and you're diluting more and more and more heavy and whatsoever, it's like a devil's cycle somehow, you know. I mean, shares getting less worth, so you need to compensate more stocks on an absolute number because each stock is less worth, and so stocks getting even more diluted, and you know, it's so yeah. I think you understand the story. And yeah, however, it's heading into the right direction. Now let's check out, I mean, maybe there is some faults you can find, some flaws, some awkward aspects in the guidance, in the full year guidance, why the stock is aftermarket pricing dropping. Let's check out what is going on with the revenue. I mean, I have here as well the guidance, the revenue guidance. So you can see here before yeah, you can see it looks good. Before Q1, the guidance was roughly $1 billion and $1 million US. Then it was decreased to below 1 billion, which was, I think, very unfortunate, because I mean, investors want to see the billion mark, that it's getting crossed, and then to decrease the guidance, not that nice. And then they increased it again by not even $1 million US actually. Oh yes, they did, by 1.5 million. And now they increased it again. Yes, I mean, it doesn't seem to be the big business, the big money, just 1 million up, 1 million down, whatsoever, but it is the right story. And in the past, again, in Q2, for instance, they lowered the guidance and it hit the market negatively. And on the other hand, now when it's getting increased, the guidance, and even if it's just again only 1 million, I assume that the market should respect it somehow, yeah, and take a note of it. And doesn't seem like this. However, for me, I take a note and I put it in a positive direction. I mean, because keeping the guidance for me as neutral is okay, but increasing is almost in any case is positive. So now we're talking about the revenue growth of, is it overall? Yes, 22%. Not that nice, but at least a bit better. How much was it before? Oh wait, it's not a good idea to do it like this. More like this. 21.7 to 21.9. Yeah, however, it's okay. And now let's check out what's going on with the profitability, going back to gross margin, but in this case on a non-GAAP base. So it's considering effects which you would regularly not. And we can see here, I mean, again, the business year started with a guidance of 79%, it was 79%, and it was slightly lowered because I think of the acquisition of a company which is called, is it Prompt Security? So they purchased another company. I think they purchased even two, not sure. Observo AI maybe as well this year, or was it last year? But for sure Prompt Security, which is taking care a little bit of internal user AI security, if you want to state it like this. I mean, check out by yourself what Prompt Security is doing. I think it's a good solution. Yeah, I think they consider those costs. We can check out in a moment if they added another information why they lowered it right now by another more than a percentage. That is not nice to see, actually. I mean, I can leave here as well clearly a red mark, but negative mark. But I'm not sure what is behind this, honestly. I'm not sure what behind this. Okay, let's take out what is going. Take a look on the operating margin. I mean, you have seen that the results are heading in the right direction, and then obviously, I mean, again, it started with 3.5, then lowered it to 3, and now they raised it to 5%. So I think that's quite a huge raise, and this is like I like to consider as positive, and rate as positive. And I mean, overall full year guidance. 2 times green, 1 times red. I mean, this is neutralizing each other a bit. And then we have the revenue. Yeah, I rate it as green, because normally when there's no development, no changes, no adjustments in any direction, it is for me already neutral. But 2 times positive is for me at the end positive. Yeah, it's very slightly positive. It's not like strongly positive, but it is. And I like to see that they're getting more comfortable and confident in terms of the revenue guidance for the full year. Yes. George Stoika 7320. So another one. Thank you very much for joining. You have mentioned thanks for the analysis. Seems like a good quarter. Yes, from my perspective, it actually seems like a good quarter. Not sure if I'm speaking the truth in terms of if I interpreted the numbers correctly, and we will go in a moment quickly through the presentation slide deck, and we will check out what are the first reactions of the market at Seeking Alpha. But really, for me, very solid. I mean, look again. I mean, I rated the SentinelOne that often, so often negatively. I was invested in this company now for 1.5, 2 years, something like this. And then before this, I took a break. And before this, I was invested like at least a year or 2 or something like this in SentinelOne. And I suffered strongly and experienced a lot of pain for this company, actually. But last quarter was already for me quite convincing. But it was, I think, still a neutral rating. And which is surprising, because I never left a neutral rating at this company, you know. And now, I can tell already now it will be a positive rating. I mean, again, bottom and top line growth is positive, for sure, no matter if we talk the actual results or as well the forecast. Yes, I mean, I assume this is taken very, very negative with the ARR and the large customer development, but that is not all what counts. I mean, it's a huge number, ARR, don't take me wrong, but it's not worse. It's like still 23% year-on-year growth. So more or less in line with the revenue growth. Yes, it shows that next year they might get lower even with revenue year-on-year growth, but all of this is kind of, from my perspective, priced in. It's not a heavy, cheap company, at least in considering that it is a cybersecurity stock. However, so I mean, that's yellow to negative, a bit more negative maybe, I would say. The gross margin doesn't look that great, but then expenses looks great. Yeah, my KPIs are a little bit bland, but keeping the loyal customers loyal looks good. On the other hand, acquiring new ones, again, because of this number, basically it doesn't look that great. However, net income margin looks good, free cash flow margin looks good, stock-based compensation still crazy high, but not surprising, guys. I mean, everyone who is confronted with the details of SentinelOne and the internal data, you know that they coming from a very high level, and it will not be like they come from 30% and tomorrow they will be at 15%. That's not realistic. What? Come on, guys, what's going on? And again, it's all-time low, and it's way lower than the past quarters. That's nice to see. And guidance again, they raised it. So this overall is neutral to positive, maybe with, let's say neutral to positive. I mean, just on the sheer amount of positive aspects, it is more positive, but again, ARR hits a little bit more strongly and has a certain weight in it. So why I say, okay, let's keep it between neutral and positive, yeah, and not state it or mark it straight and positive. However, top and bottom line growth is positive. That especially revenue weighs for me a lot, and then overall we're talking about positive results. I'm personally very happy with it. Not sure what is the reason for this drop, but let's see. Okay, now let's check out the first market reactions by going to the browser, entering seeking alpha. It's down 9%. I mean, very, very likely. I purchased already a lot in the past weeks, and if I not find something what I didn't find now during the stream, I can imagine to purchase further shares, even though the position is already quite large, and I don't like to invest more and more and more when somehow you invest in a stock which somehow doesn't create momentum. It is how it is. I always think in a certain point in time it has to, but not sure why not. Okay, let's check out what is going on with directions by the market. Okay, so first reaction is unfortunately quite unimpressive operating margin, 28%. Let me check this out. It's lower than revenue growth. Yeah, okay, negative 28%. Growth rate is 23%. That seems to be a wide gap, but I don't know what is relevant. Non-GAAP operating margin is 7%. Stock back compensation is 29%. Yeah, okay. Okay, nothing too interesting if you ask me. Just some regular conversations. Millennial Investment is telling, it's always curious to see this one maintain growth, but the share price suffers. It's trading at 5 times sales with a 23% growth rate. This should be at $30 using napkin math. The market opportunity is too large to ignore for a leader in the space. There are powers that do not like it for whatever reason though. Yeah, and I share this opinion. And I share this as well with Viktor Dergunov, who created this analysis. Oh, no, but I think he's, you can see he's an investment guy, so a bit more experienced. For sure more experienced than me. Great to hear I'm not alone on this island. Buy the dip. Tech value trap. If you think any tech stock is cheap, it's clear a sign to stay away. You got to pay more for better quality. I'm not sure, guys. I mean, I understand what he's telling, and it's, of course, it feels a bit awkward that CrowdStrike and other companies are in the space developing in a good direction, even with some blackouts like CrowdStrike had last year. Somehow SentinelOne couldn't participate out of it and grant some new potential, new customers from them. However, we know it is growing on a level it's growing. Again, that's the same like with share-based dilution. It will be not from today to tomorrow that revenue will grow to 30%. Maybe it will not anymore at all grow. I am personally, I would be kind of satisfied if they just can keep the level of growth of 20+%. I would already be happy if they can keep it for quarters and quarters and quarters. That would be for me enough. If on the other hand they lower other expenses and compensations. Okay, so PMG 1959 is writing, as should sell itself, a company like Palo Alto Networks will need more acquisitions to keep the gravy train rolling, but I am unsure of the product line fit. And then other one is writing, as an Okta is identity security. Need for management team can deliver any kind of sales motion. Okta is much worse than us, but they both per nil disappoints. Okay. Another comment from El Financiero. Results are good, but the story is the same. It's the same. Stock-based compensation is ridiculous. 280 million annual run rate. They need a real financial discipline. Clearly, the growth at all costs isn't working because they are only growing at 23%. Yeah, and I understand this. This is again this dilution, this cost situation in terms of revenue. You can do this if you achieve 50%, 40%, 60% revenue growth. But it's a bit more tricky and more difficult to accept as an investor when they're growing with like 20+% and throwing out money out of the window, you know? And I mean, like 40, 50, 60% year-on-year growth, revenue growth, just a few of companies can achieve this on a certain scale of revenue growth, achieved revenue. But way more can achieve like 20% revenue growth, yeah? And then you think about, okay, now they are 23%, how long it will take till they are at 15%. And when they have 15% revenue growth and still are quite pricey somehow and have strong expenses, you ask yourself, why you should really invest into SentinelOne when this company is competing with a lot of other companies which are growing as well on 15%, but on the other hand are strongly profitable or something like this on a gap level, you know? So I understand this, but still it's a cybersecurity company. It's working in a very specific area, in a specific sector, which is just getting evaluated on a higher level. It's quite secured revenue income sources, and I think that is what you need to consider. And I mean, the overall market is growing. Okay, let's go on what the stock scanner writing. Gap losses and stock compensation to hire zombie company. And then this investment group guy is writing, that's complete nonsense. This company has nearly 1 billion in cash plus essentially unlimited access to more financing. So it lost 24 million in the quarter on a gap basis compared to 44 million the same quarter last year. That's pennies relative to the growth, momentum and profitability growth potential. As one is building here, the stock should be up big on very solid earnings here and excellent growth. It seems like the market only cares about this growth companies produce GAAP profits, but it's early and non-GAAP EPS beats by 2 cents. I don't see a problem here. A very solid quarter. The market doesn't understand this company like I didn't understand Palantir several years ago. Yeah, I mean, I can relate to everything, but the last sentence, like, they didn't understand Palantir years ago. I was never a Palantir investor. I'm not even deep into this topic, but to just throw in Palantir or Nvidia, you know, like this huge role model, prototype beasts of companies, and compare SentinelOne to them is too easy, I think. It is very, very, very unrealistic and unlikely that SentinelOne still will step into the footprints of Palantir. That's a very different thing, you know. And on other aspects, I think what I learned more and more as a cybersecurity investor over the quarters and years is that I think the competition in the sector is crazy high. Yes, it's a lovely bucket of honey if you can access it and you can secure it somehow in the long term. But to really get this long-term key and protect the position of you as a player in this market, of a vendor of cybersecurity products, I assume it's so tough, so much research, so much development, so much sales and marketing activities, crazy, arranging events, yeah. So it is a bet on the long term, but obviously, I mean, investors are not considering this that heavily. Okay, what we have here, Downtown 10 is writing, Aunt has won a couple of different times over the years. Failed for the numerous forecast of this being the next cybersecurity breakout stock. It never failed to disappoint. Not a tempted here, and I'm not really sure if there's any price that would tempt me. Yeah, I understand this comment. I kind of understand it because I experienced it as well, as I mentioned a moment ago, and I will think as well, should I tomorrow or next week invest more money in this company? And what? I mean, even if the results are good, even if the company is good, and I'm happy with the results actually, yeah, so I can't complain. And I expected when they achieve results like this results, I expected it will definitely rise. It's really surprising for me. I can be honest to you guys. It's really surprising. And hit me on the wrong path, really. But I mean, for me, it's the question now, okay, what is the event? What are the numbers? What must happen that they will experience a U-turn in terms of the stock price, and it will start to rise and rise strong in the stock price? What will be this event? I don't know. I expected it will be something like those results today. So yeah. However, what is wrong with the AK writing? Well, at least I made a chunk on my current calls expiring tomorrow. Okay, good for you, colleague. Then DMARC is writing, looks like this management team can't do what necessary to take the share price forward. Been in it a few quarters now and it fails at every hurdle. That money stock, unfortunately. Yeah, and again, it is somehow difficult for me to catch. I understand what they're telling, but the results are not as bad as, let's say, 2 quarters ago. Past quarter I thought already is okay. And again, yes, there's always some shadow on the results. Like in this case, maybe it's the ARR, maybe it's as well the cross margin non-GAAP guidance for the full year, which is a bit lower. But so many other numbers, even the stock-based compensation looks better. It looks better. They have cash and all of this, and yeah, difficult for me to relate to this. At least in the overall size of it. Part of it I understand, but not everything. Okay. Kiwi Prof is writing, as was the young pretender, late to the party with crowd on fire and Microsoft acting as a good enough solution for the less risk-averse enterprise as had its crack at EPP, and there must now be disillusioned Salesforce as a promise of options appreciation has not happened. More downside from here. Might be the case. Again, sometimes it's not about what you think about the results or even the results are positive. It's really about how the market thinks about it. And if they just not appreciate it, yeah, you can be investor for 5 years and it can make whatever, how much billions per year in revenue and great profit whatsoever, even on a gap base. If people don't like it, they don't like it. Okay, then again, the investment group leaders writing, this stock is like a coiled spring, just as many capitulate here. The stock could form a double bottom tomorrow and take off. I'm a buyer here in all-time highs. All-time highs? I think so. Yeah, I mean, he's bullish. He's protecting his thesis as an investing group leader. But it's nice to see that 18 people reacting. I am not sure if I ever experienced this at SentinelOne. That's a good sign that it has it gets some focus. Yes. Okay, what we do next, and that will be the last step, we go through the presentation slide deck. I assume it will be quite similar to the past quarter. But let's see. Guys, is anyone still here? Use the chat and say something, whatever it is. Just write your favorite number or something like this if you are a bit shy. But it would be nice to see that you are still here. Okay, so we accelerate a bit. AR growth, okay, 23%. I have here actually the one from the past quarter. This one's from the past quarter, so Q2 2025. Yeah, again, we can see it's a bit lower. We can see, yeah, it's way lower, way lower. Not sure if we find any reasons why it's that low. that is unchanged, that a lot of products are not, a lot of revenue is not based on endpoint protection anymore. Let's say 50%, that's quite low compared to the past. Revenue growth is reaccelerating by 1% and gross margin is lower. Oh, same level. Operating margin nearly same level. What the fuck? Did I do this here as well? Okay. Okay, I used gap and they use not gap. Okay. However, okay, that is what we're not on the path to sustainable profitability, both on a quarterly and annual basis. And the question is, when they are advanced enough, people will appreciate it. I mean, if it takes 2 more years, yeah, there are opportunities to invest in other stuff, let's say it like this. Platform adoption, that is what I mentioned about this modules and this flex agreement, but again, why then only 20%? Data triple-digit bookings growth and demand momentum for AI, SIEM. That's what we already had, so basically it's nice to see that new solutions are getting accepted by the market. Okay, Observer AI at a glance. Okay, there was an acquisition, and it seems like if this chart speaks the truth, if it's correct, it seems like they made a good acquisition. Not sure for what price, but at least this professional chart here. Yeah, maybe I will ignore it. Nice, George. Nice, George, to see. Thank you very much to interact. Nice to see that you're still alive and active in the stream. Yeah, we have different use cases. However, so they did an acquisition. Okay, I think that's new. Observer AI, a category defining data streaming platform for AI native telemetry pipeline management. I have no clue. I always need to, after the streams, the earnings results, and in between, sometimes I need to check on Reddit and on other more fundamental, reliable sources what all of this means. It's definitely challenging for me. I'm not a cybersecurity native person, but yeah, it does something. It somehow integrates others, I assume. Then we have the second acquisition. This is what I understand a bit more, because in the company I'm active for, this was as well the topic, not because there were some issues, but we just talked about or still thinking about how we can progress here in terms of internal security, like as well that internal people not doing some bad stuff and open the door for hackers or whatsoever, or some viruses. But it looks as well that's of course a top-notch acquisition. Okay, that's really not new. They compare the platforms with each other. The history, that's not new as well. Okay, what's this? Powered by AI and human intelligence. But what they are talking, Purple AI. Okay, that's classic as well. That's classic as what's this? Data pipeline and enrichment via Observer AI. I like this. I mean, here they show the different categories where the solutions getting utilized, and you can see clearly why they acquired the different companies and where it is adding value, basically. And here it seems like they even developed a new one, so the list goes on and goes on. That's nice to see. There are a few comments. George is writing, maybe a way to gather more money will be to raise the cost of the modules. Yeah, for sure. For sure. I mean, cross-selling and upselling, like upselling in this case, increasing the prices, and cross-selling, selling more modules. There are these options. They have new products, they have existing ones, and I assume we will later on see a slide with the current adoption rate, and it's very, very low still. So there's definitely, compared to other players, room for improvement. But on the other hand, again, then you wonder why 100,000 plus US dollar ARR growth is is that negative, let's say it like this, year on year. Hi Lori, I have honestly no clue. Again, this is the results, how I rated them, and you can see primarily green. Again, yes, ARR growth is not that strong, and $100,000 ARR customers is quite bad, and the margin is a bit tanking, but I'm not sure. Expenses and everything of this looks good. Don't know really. Okay, we have the TAM, the total addressable market. We have different potential approach angles and business cases like working with distributors, governmental organizations, partnerships, all of this. Then we have a bit of rating, but I think there's nothing new. You can still see in terms of the technical aspects, at least based on the research company Gartner and their Magic Quadrant, it's placed on 3rd position. Yeah, not that bad. I'm not sure if any customer can understand the difference, but it is how it is. Here they are addressed even better, however, positioned even better. So now we talk a bit more about the numbers. ARR, I had covered already with 22.7% revenue, which is quite strong, I think, with 23% year on year. Here, this is what I mentioned a moment ago. Of course, here the customer year on year growth of the larger ones, you can see here a jump of roughly 100. You can see another jump here of 40, let's say like 40, 50. Then we have here something like 60, 70. And here again 60. As well, not that worse on an absolute number, but maybe again, yes, year on year, not that compelling. But I think that's very interesting to see, because here we talk about the module and the solution adoption. And this is, look here, that's Q2 2025 results. Okay, yeah. So just check if there's any difference. No, not at all. Okay, so we can see here that 40% of the customers have adopted to free solutions or solution categories, and that's already quite a strong growth. And then we have 20% even have 4 different solution categories. Whatever solution categories mean, I mean, it will be likely endpoint protection, cloud protection, identity protection, AI, data, the basics, let's say it like this. But you can see it's 20%. So yeah, for sure, like George mentioned, there's definitely some room for upselling and cross-selling. And it seems to grow like very strongly. Again, not sure why then larger customers are not growing stronger, but yeah, I mean, it seems to be unchanged, which is somehow bad. But on the other hand, it has still some potential to grow in this regard when we take it positively. Gross margin we already covered, operating margin we already covered, big difference. Net income margin you can see we already covered, very different. Free cash flow margin as well. Wait, do we have any comments? Revenue. Full year outlook reflects guidance. Talked about this as well. Okay, maybe. Again, I think it is, when you consider it like I do it with my preparation work, then you can see it's actually the forecast is better than expected. Because again, last year Q4 forecast to the forecast before was roughly 12.5 million. Now it's 14.8, so 2.5 more, which is kind of strong development. If you see it like this, I think it's not that bad. But again, if you consider or set a higher focus on the number of year-on-year growth for really the complete quarter, 20%, yes, maybe not that nice. Maybe there's some awkward seasonality, I have no clue. But it is how it is. Okay, what 1% impact from the end of sale of the hologram deception solution. Yeah, I mean this 1% was already existing, like this year-on-year growth stuff is already existing like 2 quarters. I think it is already known that it will affect it somehow. It's not really new. Okay, gross margin because it's lower as well. Q4 and full year 26 outlook incorporates strategic investments in cloud infrastructure and capacity expansion, and that's likely the reason why the gross margin is suffering a bit. Okay, and operating margin, full year 2026 outlook includes an estimated impact of 120 base points from FX, 70 base points from prompt security acquisition, and 60. Yeah. So it would be even way higher if they would not do all this merchant acquisition activities with Observer AI, prompt security, and FX. But I mean, yes, now you could think, okay, then automatically next quarter, just based on this, because then the acquisition already took place, then it must be like 7%. And yes, might be the case, but who knows what they will purchase next year. I assume they have still some cash in it, and yeah, in this regard, they have enough power for sure. Okay, guys, I check the comments in a moment. First, let me check one more. The aftermarket price, minus 8%, that's crazy. Yeah, still minus 8%. Man, that is really some pain. I really don't understand why the market's reacting like this. Again, for me, it's the first positive verdict about the earnings results since I'm an investor. Yeah, so definitely several quarters, and I like it. But if the market is not even disliking, then it's getting really a bit awkward. Okay. George is writing now when they have 1,500 plus clients. The earnings seem good. Why did we tank? We already hit this. And then Laurie is writing, I'm sure it will pick up. Always volatility around the earnings release. Are you a big holder of S? I'm holding 2,000 shares at the moment, but might need to average down with the current drop. Yeah, but I'm a little bit broke, honestly, but I can show you how I'm invested in it. Shit. It's not up to date 100%. I had 2,500 shares. That is 1 month old. I think I purchased in this period one time for 4,000 euros. So it might be roughly 200 more, if I'm not mistaken. So roughly 2,700 shares of SentinelOne I'm invested in. All of these numbers are not 100% up to date, 1 month old. I need to do the portfolio update at the weekend. But 2,000 shares are strong, Laurie, I can tell. I mean, strong. Maybe you don't want to have that much shares when the company, the stock price of the company is developing like this, but it is how it is. However, for me, positive. I don't want to repeat myself, but and now mention again and screen all the details, but for me, it's definitely positive. And I mean, if you don't think that the results are positive, then I hope at least you had the feeling that the stream was positive. If that was the case, please feel free to like the stream, subscribe to the YouTube channel A Sense of Capital, or follow me as well on my Instagram account as well, named A Sense of Capital. That was the last company I backed in terms of the earnings results for this Q3 quarter. I think we had 1 time negative with Hims and Hers, 2 times neutral with Grab and Nu, and 1 time positive now with SentinelOne. Reddit is my new stock, but I'm not. didn't cover the stream now. I will cover it in February, the first time. But yeah, with one time negative, one time positive, and 2 time neutral, it's overall neutral, and I can live very well with this kind of results because my expectations are regularly a little bit higher than those of the markets. A bit awkward now with SentinelOne because they definitely covered my expectations, but it's how it is. Laurie, what you're writing, nice work. Thanks for the live. Long term, still bullish on this. To be honest, will give you as a follower. Highly appreciate Laurie's Sparks 6215, that you enjoyed it and it maybe entertained you, and we could help each other a bit. I will see. I expect. Look, but for me, that's when you see the thumbnail of the stream. It's called Lemon or Lemonade, and already past quarter I stated it's something like perform or sell it, and it's really like green or red. I really don't want to be invested in a company and not in a company for 2 years or whatsoever, which is somehow not moving. And if it's moving in the wrong direction. I mean, I was already up like 30 or 40% in the whatever a year ago or something like this. But it developed really unfortunate, and yeah, I need to really think about if I invest more money. I really need to think about it. What was the one more time? Sorry that we need to go back. But I can really, I mean, I'm not the type of person who will just hold the stock if I think it's worth to invest money. It's very likely, even if I'm running out of cash, I would still catch somewhere some money and invest in it. Wait, I want to see the guidance. 271. Yeah. How much growth was it? How much growth was the forecast? I have no clue. How much is it? %22%. Yeah, 22% as well, not crazy compelling. What they're stating as the forecast for next quarter. Yeah, we're getting closer to the magic 20% year-on-year revenue growth barrier. Who knows? Guys, I need to sleep. Thank you so much for joining. I hope you enjoyed it. I hope you enjoyed the other calls as well. Hope you will come back next earnings season, Q4 2025. In February, I think, February and March. SentinelOne is always quite late, so I assume in March somewhere, or even April maybe, don't know. I hope I can stick to the position, and I hope you feel comfortable with whatever you decide to do. And yeah, make sure you check as well the earnings call of SentinelOne, with the CEO, Tom Weingartner. And you always learn something, I assume, and maybe there are some details in it which I missed. But again, I like it. And I think data and AI is growing triple digit or something like this. So could be worse. Caesar Magna J5F is writing, hello, Caesar. What is your guys' price prediction for us 2026? Yeah. First, kind of congrats that you purchased more stocks, more shares. Again, I might follow you tomorrow, not sure yet, but we'll communicate this at the weekend very likely if I do it or not. My price prediction, I have no clue, really, especially not for SentinelOne. I never do price prediction. I just follow from quarter to quarter. I check the product portfolio, the service portfolio, try to understand as far as I can, and just be invested as long as I feel confident and convinced, and try to follow it very closely. And again, if I would now sell the stocks, the shares of SentinelOne, it would be very irrational and inconsequent from my perspective, because then I should do this already at least 1 quarter ago or even more. Because again, last quarter was for me really this very important one. I was really, I was for sure I was ready to sell the stock, and I thought, okay, now they're starting to a turnaround, and I still think they're doing this. The question is really, again, what are the other opportunities, the other alternatives to SentinelOne? Do you really want to be invested in it now? And it might even take whatever 4 quarters more that market is recognizing it's something really essential is going on at this company. Or for instance, do you want to go through a stock market crisis with this company? Do you feel then comfortable with it? So if the market is a little bit more shaky, these are the questions I need to answer by myself. I need to answer them basically and find the answer for me at least at the weekend. But again, I think I likely invest at least a small chunk just based on a principle more. But let's see. Jen Western 766, hi, welcome to the stream. Very thankful to have you in, and both of you guys. And feel free to follow me and subscribe and like the stream. It makes me happy. Maybe it makes you happy as well then. I don't want to lie at the end, it makes me just happy. But then you will not miss future streams. But you mentioned, sorry, just joined streams, saw results briefly in my mind. It is a new CFO, sent back guidance. It is a new CFO, sent back guidance situation. Actually, I even listened to an interview, I'm not sure if it was Goldman Sachs, JP Morgan, something like this, with this CFO of SentinelOne, and I think CEO, I'm not sure if Tom Weingarten joined as well. But yes, she always mentioned like the past quarter, like Q2 results, they already at the end of the quarter, they felt like they had a strong pipeline of new contracts, and this strong pipeline might affect very well Q3 results, and it affected, in my perspective, Q3 results in a positive manner. Again, I think I personally at least don't complain about the comparably strong revenue beat, good forecast expectation, and strong earnings per share. Even though if margins in some directions getting a bit down and whatever. Again, ARR development is another story that might be really serious, not sure. If you think the future will completely follow to the current ARR development, which is not that strong with, what was it, like 23% and 20% large customers. Yeah, not that convincing. But however, yeah, and they mentioned as well, they stated the guidance a bit more on the secured side of life, and it is kind of a bit of sandbagging. But I think as well, if they tell they will hit through the 1 billion mark overall revenue for 2025, now $1 billion and $1 million US. I don't think they will crash it from now to tomorrow, like to 1 billion and 10 million, like make a beat happen with 9 million. That I think will not be the case at SentinelOne. This company is not doing this kind of stuff, at least so far, as long as I was invested at least. Yeah, I mean, maybe 3 years ago it was a bit different, but now it is quite. It's not like this crazy magic company where investors go in and think like Palantir, growth will never stop, it will re-accelerate, and who knows where it will be in 3 years and 10 years or whatsoever. That's not this kind of company. And even though, yes, as you mentioned, it's slightly re-accelerating the revenue. Again, I think this glance into the future. Again, wait, let's check this out. Yes, revenue grew stronger past quarter, like 22%, now 23%. but again, ARR, which is a little bit more in the perspective, in the more long-term perspective, more far away future perspective, it's getting down a bit from 24% to 23%. And I assume, and again, as well with the large customers, might be a little bit an awkward mix. However, again, even you joined late, you can see a lot of green, and that's positive in my world of investing. And at the end, again, everyone needs to make his own decision. However, guys, I need to go off. I'm not sure if you recognize it. My eyes already dropping down. It was a long day. Wait. You ask another question. What do you think of the 22% year-on-year last quarter? Oh, wait. Even my power getting down. But I have a charger cable here. Just give me a moment. Okay, that's good. What do you think of the plus 22 year-on-year last quarter, 23% year-on-year? If that trend continues and the guidance of central bank looks very bullish. I don't know. I don't know if this reacceleration is going on. Again, I've already mentioned it. I assume you haven't been present at this point in time. I'm personally a happy investor if they can keep growing more than 20%. Everything above 20% I am happy with as an investor, as long as the cost base getting lower and lower, the share-based compensation getting for sure lower, so the level of dilution. And I think that is very important. That is very important for investors, that they see, okay, this company is not burning money like hell. I think that's really important. Again, there is this kind of fear existing, which is very reasonable, that revenue is decreasing, revenue growth is decreasing, and on the same time, the cost base is still very high, dilution is very high. And again, you can't, what kind of company you are, but you can't afford 30% stock-based compensation on shareholder dilution when you just grow by 20%. I think it should be in the opposite direction. You should grow by 30% and dilution should be 20%. Like something like this would be reasonable. And therefore I hope that they can keep this at least 20% revenue growth and the 30% or now 29% shareholder dilution getting lower than this, and then lower and lower and lower. And I think that's a must somehow, but it takes time. And if it goes down now like 1 or 2, let's say 2% per quarter, it's now 29%. So you can calculate it by yourself, like at least 4 quarters, at least a year, if it goes on like it currently develops, at least a year till it is like on a level of 20% of shareholder dilution. If the year-on-year revenue growth is still on a level above 20%, if that's the case. And I assume that then investors thinking about, should we really stick on this company? I mean, it would still be for sure my cybersecurity pick. I'm convinced by this. If I need to pick one cybersecurity company, I'm quite happy to be invested in SentinelOne. But the question is always, are there other sectors, other alternatives to cybersecurity and to SentinelOne, for instance? Maybe there is. It's a very juicy piece of cake, cybersecurity, and the demand is rising and all of this, the TAM whatsoever. But on the other hand, if the competition is that strong in this business, it might be just very challenging to be active there as a player, especially if you are not an elite and you are competing with large companies like CrowdStrike, like Palo Alto, like Zscaler, maybe even like Okta, in different categories, like Wiz, what was now acquired by Alphabet, like of course Microsoft and their large chunk of cybersecurity stuff. So this is all what you need to know. I mean, or what you need to consider, and that's different. That's a difficult calculation at the end. Would again which again every investor needs to make by himself or herself. Do you think a new CFO will take us to higher profit or big losses or mismanagement? I mean, do they have a new CFO? I read it 2 times now. What the fuck? Or do you mean, I mean, they had already a new CFO, huh? Barbara was already, we outperformed our expectation. Or, okay, wait, here we have something. Leadership update. SentinelOne today announced that Barbara Lawson will transition from her role as, I mean, she was already, I think she was already quite new, as CFO to, wait, I share it. Sorry, guys. Okay, here is the text. To pursue an opportunity outside of the cybersecurity industry, Ms. Lawson will continue to serve in her role through mid-January 2026. Upon Barbara's departure, our Chief Growth Officer, Barry Patchett, will serve interim CFO to ensure a seamless transition. Barry is the second executive with more than 25 years of experience in operational leadership in enterprise software companies including SAP and Stripe. The company has initiated a search for its next CFO. I'm not sure. Okay, that's very thankful and grateful. Thank you very much for sharing this one more time. I think someone else already mentioned the CFO stuff, and I thought I'm talking about the existing one, which again, I think she's not longer active than 1 year or something like this. Yeah, but of course it's not a good sign, you know. I mean, there's always the question why someone joins a company and then leaves it, or make this person leave. I mean, that's, you want to have. I think for SentinelOne, I mean, okay, that might be a big aspect as well why the stock price is tanking. But if that's the case, who knows? It's like when insiders, like management, is selling shares. You never know what is really the reason behind it, and sometimes there's good reason to do it, not because of this actual company they are active for. And yeah, you can always interpret it in some direction. That's here the case as well. But again, SentinelOne, I think, like many companies, but especially this company, needs to have this solid, almost linear development. It's very important, I think, in any direction. Revenue development, ARR growth, profitability, achievements, and expenses, how they develop. All of this needs to be somehow linear, and it needs to develop in the right direction, not with too many strong hiccups. I think every hiccup will be a strong hit for the stock price. That's my opinion on this, at least. And of course, like exchanging the CFO out of nowhere a bit is kind of a hiccup. Yeah. And what you're asking again, do you think new CFO will take us to higher profit or big loss or mismanagement? No clue. honestly. I think management is very, very important. Very, very important. And it's something what you can't measure in KPIs or whatsoever. Very difficult to catch in numbers. So your question is, Caesar, is I think very reasonable. But I don't think that the new CFO will take us to higher profit. I don't think that will be the case. I mean, it's the CFO. I mean, yes, it can take a bit care and whatsoever, and yes, they have some room for adjustments and all of this. Of course, no doubt about it. But for me, like, I think it would be way more interesting to exchange. I mean, a way more a stronger shift, a stronger change would happen if they would exchange the CEO or CTO. From my perspective, CTO, I think in cybersecurity as a technical officers, I think as well very important in the cybersecurity space, for instance, and or even marketing might be very important. Yes, I mean CFO is always important in every sector, no doubt about it. But I don't think we have no clue who will come, I think most important, they will find something who's good, yeah, and they will not tell, we just use this person we already had because we had no other choice whatsoever. You know, that should be not the message. I hope they find someone who's really good and everything is going well. And of course, we hope that this is not connected with some awkward, negative, shady stuff. I don't think it is, yeah. But sometimes, you know, when when stuff on the C level, on the top management level, only stays quite shortly, you really think, okay, is there something behind it? Are there some issues you can't see from the outside, but which might impact very negatively the business and the outcome of the business? Yeah, but so far, hard for me to rate. But I still, actually, as well from the CEO, I'm not sure how convinced I am by Tom Weingartner as CEO and co-founder. I have no clue if I'm that heavily convinced. I'm quite sure out of my 5 investments, it is very likely the least convinced manager who's leading a company I'm investing in. I think that is what I can tell from my perspective. What doesn't mean that he's negative or whatsoever. It's just my impression. However, numbers are for sure okay for me, and I know that CFO will leave, and that might be impact as well negatively the market price, very likely. Even though there is still a lot of dilution and this kind of stuff is going on, that might be even for me a stronger reason to invest a bit more money in SentinelOne. But let's see. Tomorrow I wake up and maybe world's different, fogs are different, and I will act different. Let's see. I will definitely inform you through Instagram and through the community function of YouTube, of course. And yeah, feel free to again follow and to subscribe. Thank you very much, guys, for joining. Was definitely a pleasure as always. Take care of yourself and stay healthy, and take care as well of your beloved ones around you. I think social health, being healthy mentally, physically, I think is more important than being financially stable. So take care of this. That was not financial advice, consultation whatsoever in the past almost 2 hours, 1.5 hours. And yeah, Jen Western, you and of course the other ones as well, highly appreciate you joined, and have a great night as well. Sleep good and all the best for your investment career. Hopefully see you again in, let's say, roughly 2 till 3 months. Cheers and bye-bye. A sense of capital.